Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Hello, and welcome to another enlightening episode of Tax Smarts Unlocked. I'm your host, David Robson, and today we're diving into an exciting and sometimes perplexing topic: the tax implications of cryptocurrency for small businesses. As we know, cryptocurrency isn't just a buzzword anymore. It's rapidly becoming an integral part of the business landscape. For small business owners venturing into the realm of digital currencies, understanding the tax nuances is crucial. We'll be breaking down essential concepts and exploring strategies that can alleviate your tax concerns with cryptocurrency, all while keeping things light and informative. To kick things off, let's talk about the growing impact of cryptocurrency on small businesses. In recent years, we've seen an exponential rise in the use of digital currencies, not only among tech companies but also across various other sectors. From retail to real estate, businesses are leveraging cryptocurrencies for transactions, investments, and even making payroll. This growing trend prompts an important question. How does the IRS view these transactions? Well, the IRS has stated that cryptocurrencies are treated as property for tax purposes. This foundational point means that general tax principles applicable to property transactions apply to transactions using cryptocurrency. So every time you use or sell crypto, there could be tax consequences. This leads us to one of the most crucial aspects of managing cryptocurrency in your business: accurate record keeping. The importance of meticulous records cannot be stressed enough. Each transaction must be recorded, as you'll need to report gains or losses on your tax return. This includes tracking the fair market value of the cryptocurrency at the time of each transaction, which can be quite a task given the volatile nature of digital currencies. Investing in good accounting software or consulting with a tax professional who is well versed in cryptocurrency can save you significant headaches during tax season. Now, onto reporting requirements. When you buy, sell, or exchange cryptocurrency, you might have to report these transactions on your tax return. It's similar to handling stocks or other properties. You need to determine the cost basis, which is the amount you paid for the crypto, and then calculate the gain or loss when it's disposed of. Any capital gains tax will depend on whether it's a short-term or long-term gain, depending on how long you've held the asset. Losses can also be leveraged to reduce taxable income, providing a valuable tax strategy for businesses. While we're discussing deductions, let's touch on what you may be able to deduct from using cryptocurrency in business. Any business expenses paid with cryptocurrency are deductible, just like any other business expense. However, remembering that when you use cryptocurrency, you're disposing of it, potentially triggering a taxable event, is important. For example, if you pay an employee in cryptocurrency, it's considered wages and subject to regular employment taxes. You also have a payroll tax obligation. As is typical with taxes, you are strongly advised to consult with a tax expert to explore all possible deductions and understand the implications fully. Inevitably, there are common pitfalls that small business owners may encounter regarding crypto taxation. A frequent mistake is neglecting to track transactions properly, leading to inaccurate reporting and potential penalties. Another is overlooking international tax considerations. Cryptocurrencies are inherently global, so transactions might involve foreign jurisdictions with their own tax rules. Failure to comply with foreign reporting requirements could result in hefty fines. Additionally, fluctuating values can complicate things, and businesses may miscalculate taxable income from gains due to crypto's volatility. Strategies for minimizing tax liabilities are essential for small business owners dealing with crypto. Here are a few tips. Firstly, consider selling off crypto that has depreciated in value to offset other gains, known as tax loss harvesting. Utilizing tax software that supports digital currency can also automate and simplify your reporting process. Holding onto assets for over a year can convert a short-term capital gain into a long-term capital gain, which is taxed at a lower rate. Lastly, consider setting up a self-directed IRA, as it can offer tax benefits and control over your investment decisions regarding cryptocurrency. Let's illustrate these strategies with some practical examples. For instance, let's say your business receives Bitcoin as payment for services. Imagine you held that Bitcoin for 6 months and it appreciated in value. When you convert it to traditional currency, you must report the gain based on the initial value and the market value at conversion. Alternatively, if the Bitcoin had depreciated, selling it within the same taxable year could allow you to deduct that loss against other income. Keeping such scenarios in mind while navigating your crypto journey can be highly beneficial. As we wrap up today's episode, I want to stress the importance of seeking professional guidance. Cryptocurrency taxation is fraught with challenges, and mistakes can be costly. By working with a tax professional who understands the nuances of digital assets, you can ensure that you're leveraging every possible advantage while maintaining compliance. Proactive tax planning can make all the difference, enabling you to focus on attracting and retaining customers without the anxiety of impending audits or penalties. In summary, we discussed the growing significance of cryptocurrencies for small businesses and the IRS's treatment of these assets. We covered the essentials of record keeping, reporting requirements and deductions, addressed pitfalls, and shared strategies to manage tax liabilities. The overarching takeaway is straightforward. Adopt a systematic approach to your crypto transactions to manage your tax obligations effectively. And with that, we conclude another episode of Tax Smarts Unlocked. Thank you for tuning in. We hope you found today's discussion valuable and informative. Until next time, remember, the world of tax doesn't have to be taxing when you have the right tools and knowledge at your disposal.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.